Está con nosotros Mark Dowding, Chief Investment Officer at Bluebay Asset Management. Mark, good morning.
Good morning. Pleasure to be with you.
We knew the decision of the FONC yesterday. What do you think about this decision?
Well, in terms of the Fed, I don't think the outcome was any surprise that rates are on hold and the message is higher for longer. This has been our view for some time. I still think the markets, though, are still adjusting to this new reality that actually rates after they peak aren't going to be coming down quickly, but they could stay at these levels for an extended period of time. We need to remember that actually the US economy is really doing pretty well right now. I was recently in DC and I was struck by how relatively strong activity seems to be in the US economy. So I still think that we're in an adjustment phase where markets are starting to adjust to the reality that rates really are staying higher for longer.
Do you think that stagflation is a real risk in Europe?
Yeah, so I think unlike the US, where the economic outlook looks quite strong, there's no doubt that from a European perspective, the growth backdrop is getting materially weaker. At last week's ECB meeting, we saw downward revisions to growth projections, but at the same time, inflation remains stubbornly high. And so from that perspective, I think the narrative that we pick up from the ECB when we meet with them is one where in the coming months we can expect growth to slow, but inflation to remain stuck pretty close to the levels where it is today. And from that perspective, stagflation risks are something which are starting to be discussed and are becoming more of a concern for 2024. I would say, though, that actually stagflation seems to be much more of a reality when I think about my own country. Here in the UK, I think we've got much more of a stagflation problem than we have in the rest of mainland Europe.
The different problems between China and United States are very usual in the last days, but do you think that the geopolitical tension is increasing and could affect the economy?
It is. So we think that we're seeing increased evidence of decoupling between China and the US, and this is having a big impact on the global economy. Mexico has overtaken China now as the US's main trading partner. And I would say that from a European perspective, I think further decoupling, disengagement, measures against China are likely. One of the things that this will mean, though, is that it's likely to be another factor that could actually add to inflation pressure, another reason why rates may stay higher for longer.
What do you think about the decoupling of the Chinese economy, and do you think that this could affect the markets?
Yeah, so I think that if we look at China itself, we think that China is likely to be a country that gets old before it gets rich, unlike Japan, where obviously society got wealthy before aging really kicked in. So we're quite downbeat on prospects for the Chinese economy itself. Otherwise, I feel that when we think about sort of global markets and the implication of geopolitics, this is going to be a factor that potentially leads to episodes of volatility, episodes of risk. And so I think that in global markets, from a macro perspective, there'll be periods where markets look pretty calm and then other moments where volatility really comes to the fore. And I think as investors, sometimes we need to be prepared in advance for volatility. And it's actually how you invest and how you deal with those moments and episodes of volatility that can really determine whether you have success or failure in your portfolios.
Thank you very much. Mark Dowding, Chief Investment Officer at Bluebay Asset Management. Good day, good business.
Thank you very much. Go Jude Bellingham.